The following is an update and technical analysis on Bitcoin, the largest component to the cryptocurrency markets here off the daily interval. Whereas I had mentioned on the 5th of July 2023, we're trading spot price 30,533 that it would be an objective entry. Short trade setup began the scaling process. On top of this primary 31,914.30 price resistance, we had negative and bearish divergences that really constructed and only continued to establish amongst all three key technical momentum indicators. And it was met with a wave of selling right off that key inflection point. To start that near term, we had that near term divergence as well, right off the top of the range. And we had some big headlines rock the crypto markets. Once more, the charts have seemed to manufacture and drive the news cycle. Rumors circulated about SpaceX, led by Elon Musk, selling all of its Bitcoin holdings, coinciding with a rapid $800 million flash crash here during this entire liquidation. And that was good for an entirety of the trade, called a 19.9% double-digit crash. And we're amongst some key inflection points where we are testing the price resistance called 26,699.90. We have the 200-day moving average hovering in, synchronized with this hidden primary uptrend line off the November 2022 reactionary highs and lows. And that was a significant turning point I had mentioned. That bull traders and or long traders needed to defend this key inflection point really at all cost to avert a potential sell signal. And we flash crashed right through it. Put in an additional sell signal, small little sell signal off that key inflection point off the primary uptrend line here, where we initially had a nice clean big double-digit rally to the upside, bounced off of that inflection point. We broke down, slightly broke down below it, and then issued a complete wave of selling right below the primary channel that I had mentioned off the 240-minute interval. And what a heck of a flash crash it was. It would have been nice to get that solid daily candle close. We didn't get the solid candle close. We ended up bouncing right off which was the weekly intervals price support that I will hone in on in a minute here. And we ended up counter trend rally. We're having this counter trend rally back above the 26,699 price support as of now. In a potential backtest scenario, retesting the primary hidden uptrend line coinciding with the 200-day moving average, called a dual line of support, and an objective entry short, if not an add-on to your existing position for a much larger move down on a retest of the 25,208 price support and the 24,757. Which coincides again with the weekly interval price support there, darn near around that key range. So that's exactly what you'd want to see taken out there. Is just another key inflection point off the weekly interval. We have the moving average convergence just rolling over below their zero line thresholds, as well as the oscillator, and just an extreme becoming within in the notion of extreme oversold conditions in the relative strength index there. And that would be a potential sell signal and or backtest if the sell signal ends up sticking. As far as the bull traders, long traders, they need to step in right now, right here, and recover, retrace the move, retrace the breakdown, spur health right back into these key technical momentum indicators, revive the 200-day moving average and that hidden trend line in a move right back up, challenging just a ton of resistance up above, and really major key resistance, big resistance across the board there. And again, this would be additional nice clean risk reward ratio short trade setups to the downside if and when we were to recover a key inflection point of that magnitude to the upside. That would be a nice, I would call the maximum counter trend and or snapback rally bounce zone right up amongst that 29,869.50 price resistance. Moving on to the Ethereum, based upon the daily interval, the second largest currency to the crypto markets, off this primary reactionary uptrend line off the 2022 November reactionary lows, and that is a very well validated clean inflection point as you can possibly get there, where we ended up backtesting two reactionary high backtests in 2 days in a row there, and that was met with just nothing but a wave of big selling, ultimately snapping additionally the 200-day moving average as well. And these are some old levels, just showing you some of these key inflection points. Disregard some of these levels, but again, if you're trading that, that is a whole different inflection point where you put a negative divergence, hidden negative divergence amongst all three key technical momentum indicators. And again, that was just met with a wave of selling with the moving average convergence just rolling right over there, and as well as the oscillator histogram, just pure damage across really across the board. honing into the 240-minute interval here, where we had this primary reactionary primary channel. Again, plenty of reaction to validate the strength of it, where we had which would look like we were going to sort of break out of that primary channel, and never had a solid 240-minute green candle close above. In fact, we were rejected really to the button off the 236 fibs, called 3155 price resistance, especially for an active and or a quick day trader. That ended up netting you an entire 15.4% crash right off that key inflection point, as well as a lot of reaction right off the 382 fibs retracement, call it 29,147 price support there. And that was met with just a strong wave of reaction. To call it 2, 3, 4 backtest and successful defense reactionary lows there, which was good for, especially again if you're an active and or quick day trader, right up to that key range for 3.4% pop. Another one right here for any active and or day traders for another 1.7% scalp there. And just the velocity of that move and that drop, once we broke that key channel there, didn't even ended up catching shy from even backtesting the bottom of that primary reactionary low channel, and was just sold off aggressively in a complete all-out flash crash. I added this 25 499.30 minor, call it minor price support, and that'll be a key inflection point to watch. Again, same picture here I had mentioned in that previous video, negative hidden divergence right amongst all three technical momentum indicators, only extending that divergence, and it just came with a wave of selling into a deep abyss there in the technical momentum dimension space, taking you out to the ultimate long-term, much bigger picture, the BTC to USD weekly interval. And I had, again, mentioned in that previous video as well, the last time I ever covered the long-term Bitcoin cryptocurrency markets is this hidden divergence, hidden negative and bearish divergences, all three technical momentum indicators. And that was a significant turning point where we need a backtesting. This primary reactionary low uptrend line off the 2015 reactionary lows cuts right through the COVID crash and right through the largest rate hikes, Powell rate hike in history there off the 2022 crash. And we need a backtesting it, and we have been rejected pretty impulsively since that key inflection point. And what's so significant now, with all the damage that has occurred there on the daily interval, the weekly interval is damaged. We have a nice divergent high. We have negative now near-term divergence, confirmed divergence amongst all three key technical momentum indicators, with the confirmed bearish crossover on the moving average convergence, ready to retest and backtest, potentially retested zero line thresholds there. And that is going to be a big key inflection point with the 50 weekly moving average hovering in below. You have additionally the 24,757 price support that I had mentioned in that previous video. Again, that is a major price support, major price support level that was defended heavily amongst bull traders and or long traders today. And I've added this new benefit of a doubt secondary trend line off the 2017 reactionary lows off that crash, cuts right through the COVID crash as well. Additionally, with some reactionary lows honing into the year 2023 and at the end of 2022. And that is going to be the ultimate significant price support level for all cryptocurrency markets, in my opinion, correlating and synchronized with the 50 weekly moving average. Call it a weekly interval price support level. And short sellers, bear traders, they want to see a solid weekly candle close below that key inflection point. And in my opinion, that'll spell a potential raising the odds and the probability of a longer term. Again, this is a weekly, potentially multi-year crypto bear market if and when we snap that key inflection point. And then ultimately a re-challenge. I've been hyping and harping this key 236 fibs retracement comes right off the 2017 trough. I call it 18,332 price support, and that is the mother of all key inflection points, in my opinion. I've just continued to hype that level up for multiple years on end here, and that is a very significant price support level called a multi-reactionary high and low of an inflection point. And if we take that level out with the solid weekly candle close below, I would only suspect an additional margin calls, a ton of stops to go off, and a much larger big flash crash down to the 12,333 price support there. And again, that is a multi-year key inflection point to watch as well. And then ultimately, the big one, I believe, is the 9660 price support down below as well. Just a multi-year, almost a full decade of support there. And that'll be the utmost key inflection point to watch. And really what's so significant is what I see is additionally is, I'll take away all these lines here, is the neckline to the primary, secondary, reactionary low uptrend line, which could be spelling out here as additionally, once again, the neckline corresponding with the 50 weekly, head and shoulder looking top here. And that's exactly what you would see there. And again, I only believe the selling would come in very strong if broken down, and just a stronger, much stronger wave of selling to the 18,332 price support. Where we could even potentially backtest with the 200 weekly moving average corresponding with the 382 fibs retracement called 27,747 price support, and that is a pretty significant and major price resistance as of now, since we've completely broken down below it. Also, additionally, potentially adding an aggressive objective short trade entry for a move to the downside to keep the head and shoulder classic looking top intact.